Why you should never use miscellaneous expense and what to do instead. Hi, everyone. I'm Bev. And in my 30 years of bookkeeping, I've seen one mistake that instantly tells me someone doesn't know what they're doing. And it's not what you think. It's not backwards journal entries or unbalanced books. It's something much simpler that screams amateur to anyone who looks at your financial statements. It's the dreaded miscellaneous expense account. Today, I'm going to show you why this innocent looking account is sabotaging your books, costing you money, and making you look unprofessional. More importantly, I'll give you the exact system I use to eliminate it forever. Whether you're a new bookkeeper or a business owner doing your own books, stick around because this one change will transform how professional your financials look. Before we dive in, let me ask you this. When you see a miscellaneous expense account that's $5,000 or $10,000, what does that tell you about the business? It tells you that either the bookkeeper doesn't know how to properly categorize expenses, or worse, they're being lazy. And if you're preparing these books for a business owner, bank, or accountant, that's exactly what they're thinking too. I've had business owners come to me after their previous bookkeeper left, their miscellaneous account looking like a dumping ground. And let me tell you, it's not pretty when you have to explain to the IRS why 20% of your expenses are labeled miscellaneous. So, what's actually wrong with using miscellaneous expenses? Let me break down the 5 biggest problems it causes. Problem number 1, it hides important business insights. When everything gets dumped into miscellaneous, you can't see spending patterns. Is your business spending too much on marketing, office supplies, professional development? You'll never know if it's all buried in miscellaneous. Problem 2, makes budgeting impossible. How do you budget for miscellaneous? You can't. Real businesses need to track where every dollar goes so they can make informed decisions about future spending. Problem 3, it looks unprofessional to lenders and investors. I've seen loan applications rejected because the miscellaneous expense line was too high. Banks want to see that you understand your business well enough to categorize your expenses properly. Problem 4, it creates tax compliance issues. Different types of expenses have different tax treatments. When you lump everything into miscellaneous, you might miss legitimate deductions or worse, claim something that shouldn't be deductible. Problem 5, it makes audits and reviews a nightmare. Whether it's an accountant, bookkeeper, or IRS agent looking at your books, a large miscellaneous account immediately raises red flags. They'll want to see what's in there, and if you can't explain it, you're in trouble. I remember one client who came to me with $25,000 in miscellaneous expenses. When we broke it down, we found legitimate business deductions they'd been missing, personal expenses that shouldn't have been in the business books, and enough red flags to keep an accountant up at night. All right, so what do you do instead? I'm going to give you my proven system that I've refined over 3 decades. Step 1, create specific, meaningful expense categories. Instead of one miscellaneous bucket, create accounts that actually describe what you're spending money on. Here are the categories I set up for most businesses. Office supplies, which is paper, pens, basic supplies. Computer and technology, software, equipment under your capitalization threshold. Professional development, courses, books, conferences. Business meals, don't mix these with entertainment. Marketing and advertising, be specific there. Professional services, including legal, accounting, and consulting. Equipment maintenance and repairs, bank and credit card fees, subscriptions and memberships, travel expenses, communication, which would be phone, internet, postage. Use the Would My Accountant Understand This test. Before putting something in any account, ask yourself, if my accountant looked at this expense in this category, would it make sense? If you're not sure what category something belongs in, create a temporary items for review account and deal with those weekly. Step 3, implement the 5% rule. Here's a rule I give all my clients. No expense category should be more than 5% of your total expenses unless it's a major cost center for your business. If miscellaneous is over 5%, you're not categorizing properly. Step 4, set up subcategories for large expense areas. If you have a category that's getting too large, break it down. For example, instead of just marketing, use marketing-online advertising, marketing-print materials, marketing-trade shows, marketing-website and SEO. Step 5, create a decision tree for common problem expenses. I keep a simple chart for expenses that stump people. Meals with clients goes to business meals. Software subscriptions go to computer and technology. Educational courses, professional development. Legal fees, professional services. Office coffee and snacks goes to office supplies. Let me know some real examples of how this works. For example, 1, you buy a $50 book about marketing, professional development. Why? Because now you can track how much you're investing in learning, and it's clearly a legitimate business deduction. Example 2, you pay $15 for parking at a client meeting. The wrong way, miscellaneous expense. The right way, travel expense. This way it's grouped with other travel costs and easier to track for mileage reimbursements. Example 3, you buy a $200 office chair. Wrong way, miscellaneous expense. The right way, depending on your business, this might be office furniture and equipment, or even a depreciable asset if it's over your capitalization threshold. The key is thinking about why you're spending the money and what it's helping you accomplish in your business. Here's exactly what you need to do starting today. Action step 1, open your chart of accounts right now and look at your miscellaneous expense account. If it's more than a few $100s, you have work to do. Step number 2, export the last 3 months of miscellaneous expenses and categorize them properly. This might take an hour, but it's worth it. Action step 3, delete or inactivate your miscellaneous expense account. I'm serious. Remove the temptation entirely. Action step 4, create a simple reference sheet with your new expense categories. Keep it handy when you're entering transactions. Action step 5, set a monthly reminder to review any expense accounts that are growing unexpectedly. This prevents problems before they start. Look, I get it. When you're busy running a business or learning bookkeeping, it's tempting just to dump everything into miscellaneous and move on. But in my 30 years of experience, I can tell you that this small change makes a huge difference in how professional and useful your financial statements become. Your future self will thank you when tax time comes around, when you're applying for a loan, or when you need to make important business decisions based on real data instead of a giant miscellaneous bucket. If this video helped you, give it a thumbs up and subscribe for more bookkeeping tips that'll make you look like a pro. And drop a comment below telling me what your biggest miscellaneous expense culprit is. I read every single comment and often turn them into future videos. Until next time, keep those books clean and categorized.